What's happening, everybody? It's your boy Sean McLaughlin at Options Sean on Twitter, or are we calling it X now? I'm still confused on what we're doing there. Anyway, this is the August 17th Options Jam session where we review any actionable items amongst the open trades that we have for the All-Star Options service here at All-Star Charts. But before we get into any of that stuff, I have to drop the old disclaimer here, make the lawyers happy. Basically, everything we cover here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you learn something along the way. So let's get to it. Now, let's set the landscape here a little bit. Here's the S&P 500. As is well known, if you're paying any attention to the markets right now, we've had a pretty not insignificant pullback in the S&P. We're down, I don't know what the percentage terms are now, but I think we're something like 5 or 6 or maybe even 7% down from July highs. We had a great run up until middle of July, basically until me and Straza came back from Asia. Then the rug got pulled on the bull market. And so, as you can imagine, we had a lot of long positions during this run up, and many of them are still on, and we're giving back open profits, which is never fun. Telling a similar story is the volatility index VIX. We are off the lowest levels of July. We're certainly not in any area where we need to be screaming red alert about any crazy market crash or anything like that, but volatility is rising, continues to hold up here. This little island spike here, if you want to call it that, I believe was kicked off with the Fitch downgrade of U.S. debt. Whatever you think of that doesn't matter, but this is what initiated this spike, and we've been holding that. So it'll be interesting to see how that all plays out. But that's the backdrop that we're working with. This sets the stage for, unfortunately, I don't have a whole lot of good news for you guys this week, but we do have a nice lesson here in why we stick to best practices and why we follow the plan when we lay a plan out. Here's an example of a trade that we have on in Hershey. This is a trade that we got into back when the stock broke out in end of March 27th. At that time, we bought August 300 calls that we paid 75 cents for. And as you can see, we had quite a good run. But right here, precisely 1 month later from our entry, we had, was our best practice, as was laid out in the trade plan that we published on the day that we entered this trade, is that we had a resting order to sell half of our position at double what we paid back here on the 27th. So we paid 75 cents. We had a resting order to sell half of our position at $1.50. And on this big green candle day, we did get filled. We got out. And what that accomplished was that took all of our original risk capital out of the trade. Now, had this stock kept going, which at this point right here, we were thinking, man, this thing is definitely going to make a run for 300 and beyond. If it had done that, perhaps I would have kicked myself for taking some profits off the table. That's the cost of doing business. And the reason I do that is because, as you can see here, look what happened. It's almost like we top ticked this run, and the stock just basically faded all the way back on us. By the time it got even to here, when we had this red candle here, there was no premium left in these options to sell, even if we wanted to. So this whole leg down, as ugly as that looks, this didn't really affect us in any way. We basically gave back all of our open profits here, right? And then by the time we got to this little leg down, there was nothing left to sell, nothing to do. We were just holding lotto tickets at that point. But if there is a silver lining to this story, the silver lining is this trade had a net zero effect on our original trading capital, right? We took out our original trading capital on this spike here. So net, we did not lose any money in this trade. It was a bummer to watch our profits evaporate. But you know what? You have to be willing to let profits evaporate if you want to hold on for the big winners. This thing could have kept going to 350, right? We would never have known if we hadn't given the position the opportunity to do so. So that's just an example of my best practices. They don't always work out the way we want them to, but hey, in this case, the best practices saved us from a loss. So very good. All right, Marathon Digital Holdings. This was a quick entry and immediate exit, almost immediate, at least in my universe. We got into this back on the 9th. We bought long calls. We bought January 16 calls for 420. This was a play on Bitcoin holding that 3,100 or 31,000 level and starting a breakout. We believe, and we still believe, that if and when Bitcoin resolves higher, stocks like Mara and Riot and a lot of these miners are going to rip in beta terms much faster and higher than Bitcoin will in percentage terms. So these are the instruments we want to play to ride that Bitcoin rise. But of course, the market had other plans for us, and Bitcoin could not hold its level. And as you would expect, it took these stocks with it. We got quickly stopped out. We entered on the 9th. The very next day, it closed below our stop loss level. And so I exited on the following day, as was my plan. But you know what, guys? When I lose with options, I want to lose quickly, because when I lose quickly, then there's usually still premium left in the options that I purchased or entered. So the loss is not that total. In fact, I paid what I paid. I paid $420 for these calls, and I got out for $345. So, hey, it's a loss, but it was really just a flesh wound, no big deal. I was willing to lose 100% of my capital on those calls, of course, and I sized my position accordingly. But the fact that I lost less than $1, less than 25% of the capital, hey, that's not bad, and that's the benefit of getting stopped out quickly. So I'm never happy taking a loss, but those kind of losses I'll take all day, every day, and I'm fine with that. Side note on Mara, this was actually our second Mara position. We have another one we've been in for a while. We got into the other Mara position on, excuse me a sec. Let me check my notes. On May 31st, we're along the January 14 calls. We're still in those. And in fact, I raised my stop loss level, guys. The original stop loss level was much lower, but I've now raised my stop loss to 12. So I'll be keeping, I don't have that here on the chart, I'm sorry, but I'm keeping, I'm sticking to a $12 price level on the remaining January 14 calls that I have. As long as we stay above 12, then I'm going to keep holding on to my January 14 calls in Mara. That's an older trade that we got into on May 31st. All right. Okay, continuing the bad news parade, of course, as we said at the top, with the market not cooperating on the long side, it's hurting many of our long positions, and Apple is one of them. Now, we haven't taken action yet. My stop loss level on Apple is 175. This chart is as of yesterday's close. Today, intraday, Apple did trade below 175. It might even be below 175 as we speak. I'm waiting for the closing price. If Apple closes below 175 today and remains there at the open tomorrow morning, I will be exiting the trade tomorrow morning. These are long January 200 calls that we paid $675 for. We got real close, by the way, to selling some here when we got up to 200. Didn't quite get there, unfortunately. So if Apple can reverse and hold above 175 today, then we'll still stay in the position. But if we close below 175, and it's likely it's lights out for this position, salvage whatever we can, whatever's left of that the options premium, which shouldn't be too bad. Same story with HSBC. 38 is the level that I'm looking for. So yesterday it closed at 37.99. That's my signal to exit, right? Well, this morning HSBC, excuse me, HSBC gapped higher back above 38, and it's been holding above 38 all day today. So I haven't taken action. I'm still holding it. This trade, we may end up getting out of it eventually anyway, but I'm going to hold on for one more day. The trade still lives. I'm holding out hope that this gray level here, this is a very key support level. We're holding that, or hoping it's going to hold, and the stock has plenty of time to reassert itself. We have January options, so HSBC is on notice. And okay, that's it for trades that need attention. The rest of these trades, I'm just dropping this in here real quick. These are trades that we entered bullish positions in since we last spoke last week. MicroStrategy, similar story to Riot and Mara. We're interested in MicroStrategy because we were bullish on Bitcoin. We're still bullish on Bitcoin if it could get back above 31,000, but right now Bitcoin is not cooperating. So MicroStrategy, we might get stopped out of, but the trade plan is on the blog. For those of you who subscribe to All Star Options, you can find all the details in the blog post. Same story with Freeport McMoran FCX. We put on a delta neutral trade here, which JC and I talked about this on the morning show this morning. Given the market conditions that we are exhibiting, or that the market is exhibiting right now, I'm on the hunt for a lot of delta neutral, not a lot, but I'm on the hunt for delta neutral credit spread type option trades right now while the market just kind of sorts itself out, slops back and forth. I expect the market to, kind of be indecisive over the next few weeks, maybe even a couple months, depending on what happens out there in the old finance world. But I'm expecting sideways action, so I'm looking for more trades like this Freeport McMoran that are kind of setting up for some sideways chop that I could maybe sell some options premium in, put on some delta neutral trades. Again, all the details of this trade are on the blog. If you are a subscriber to All Star Options, you have all the trade management details, all the trade entry details, all the trade management details, where we get out if we're wrong, all that stuff. If you're not a subscriber to All Star Options, please shoot us an email at info@allstarcharts.com and we'll get you hooked up. And that's where we end up right now. If you have any questions on this, any at all, shoot me an email, info@allstarcharts.com. Or if you'd like to subscribe to All Star Options, you can do so there. All right, everybody. I wish I had better news for you this week. Next week, I'm optimistic it'll be better. We'll see. Anyway, I'm Sean McLaughlin at Options Sean on Twitter. Be sure to follow me if you don't already. Hope you guys have a great rest of your trading day and a great rest of your week. And I hope you have a nice weekend. Have a great day. We'll talk to you again next time. Bye-bye. We're driving cars on a Mars tonight. We're blasting